Can you make more money buying or selling Time Inc? We'll take a look. For those of you under the age of, say, 40 or 50, Time Inc. used to be a giant. It was Google, it was Amazon, it was everything a brand should be in the American consciousness. It was quite simply how many Americans got their weekly or even daily news. It published a whole slew of magazines. The best known was Life magazine. It had Time. It then opened People magazine in the early 1970s. All in all, it was a publishing giant. It was a powerhouse, and it made a lot of money. Where did all that money go? It disappeared, which is sad, but that's the way it is. Let's have a look at the stock here. You can see that the stock's trading at about $18 a share, down from about 13 or 14, but the essence of what Time was became Time Warner. That's the cable giant, the internet company. We're not talking about that this week. What we're talking about is Time Inc., which is a spin-off at around $25 a share a couple of years ago, and it's the magazine properties only. Do the magazines do well? Yes and no. They have 150 million visitors every month, which is a colossal number of customers, if you want to call it that. These are magazines that have done well. Sports Illustrated, if you like sports. People, if you like gossip. Time, if you like politics and news and economics. So these are serious magazines in their space. At the same time, what's happened to the magazine business? The print revenue has gone away or gone down, and while you can have a gazillion clicks online, it doesn't mean anyone is going to make money owning those gazillion clicks, because online advertising is so diffuse that while, yes, Sports Illustrated gets a lot of daily visitors, it doesn't maybe translate through into revenue. What does that mean for you, the shareholder? At $18 a share, do you want to buy Time Inc. and hope that this takeover rumor becomes a fact? Maybe someone will buy it out at $23, $24 a share, and you could hold it for 3-6 months and make a nice profit. Or should you say, if I own the stock now, I think I should just sell and get out of it and let someone else make this last money? I'm bearish on Time. Why am I bearish on Time? I don't like the balance sheet. I think Time Warner saddled it with a lot of debt, about $2 billion in debt. I don't like publishing accounting, which includes a lot of goodwill for these properties. They writes up the asset side of the balance sheet. Keep in mind, magazine subscriptions are not assets at all. They're liabilities, something they owe the clients. So all in all, while yes, these are good properties, do people buy magazines as they did when I was younger? No, they don't. Do they take subscriptions? No, they don't. Do they advertise in print? No, they don't. So all in all, while Time Magazine is an important magazine company, I'm not convinced this management and this balance sheet is enough for you to make money with. I think you're becoming a partner of a company that has a lot of debt, has a lot of liabilities, and is not clear on how it will generate revenues above and beyond what we see today. So if I'm a buyer or a seller, I'm a seller. It's all the time we have this week on The Investment Advisor. I'm your host, Matthew Stevenson, in partnership with Dukascopy TV. Remember, money can take care of you. It cannot take care of itself.